traders and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in for Francine Lacqua in London this morning. Let's start with a focus on tech stocks then. Tech stocks have slumped after Intel and Amazon earnings disappointed investors. We are seeing some pre-market trading over in the United States then now, and this is the extent of the negativity attached to, in particular, Intel, also Amazon. Amazon announced heavy spending on AI as Intel reported a grim growth forecast and job cuts. Apple, meanwhile, predicted its AI features will spur iPhone upgrades in coming months. And we certainly don't see the worst of this falling on Apple this morning. We will discuss what all of this means for markets shortly with BlackRock's Ursula Marchioni, who's with us in studio. But first, let's bring in Matt Bloxham from Bloomberg Intelligence, who's been keeping us through the morning up to date on all of the tech stories. Good morning to you, Matt. Let's start with Amazon, which is one we have not mentioned quite as much, perhaps. Yep. But I wonder if this has more read across than some of the other stories we're going to discuss in the tech space this morning. But tell us about what it is that Amazon said. Yeah,
sure. I mean, obviously, two very different parts of the Amazon business, the e-commerce business and Amazon Web Services, their cloud business. Contrasting fortunes, the e-commerce business struggling a little bit with sluggish consumer demand, with distractions from the Olympics they talked about, but also consumers continuing to look for deals and also some rivalry from kind of Chinese alternatives kind of impacting that business too. The cloud business doing better, 19% year-on-year revenue growth, better than the market expected. But as you said, these really heavy investments in AI platforms, which aren't really yet kind of translating into the real big growth burst that the market's looking for. So it's kind of like big bets today, but hopefully a payback in the longer term. And actually, we heard early in the week Meta say that actually we're probably all spending way too much money right now on technology, but we need to, because if we don't, we'll lose our position in the market in the mid to long term. So I think it's that disconnect between the amount of investment today and when it's going to pay off and how big that payoff is going to be. And then when you connect that into what's going on in the global economy, and particularly the US market that seems very weak and probably going to get weaker, corporate spending on technology transformation is ultimately what ends up in Amazon Web Services facilities and drives their revenue. And if corporates are holding back on those big AI-based technology transformations, that's going to slow the pace of that revenue pickup too.
Then that takes us on to Intel, and talk to us about what's going on at Intel, because that seems to be a much more dramatic story from what we're seeing in the share price reaction. But I wonder how idiosyncratic just about Intel.
Well, I guess it's idiosyncratic in the sense that they are the wrong side of the AI story. You know, they're trying to play catch up, and it's not really coming through yet. So we had this kind of big downgrade in the forward revenue guidance. So I think it was at $12.5 to $13.5 billion. The market's looking for 14, and these big cutbacks in headcount, 15% or more of headcount reduction, a 20% cut in gross capex tells you that the management team are looking at the forward view and thinking, wow, this isn't coming back anytime soon, and we're struggling both in terms of inventory build-up in clients, but also the rivalry from people like NVIDIA. Basically all the server demand, which used to benefit Intel massively, is now going to people like NVIDIA, and their AI PC strategy is really being a bit slow to kind of pick up. So there's going to be this big gap and a big question mark about whether they're doing enough and can do enough to claw back and kind of find some kind of strong position in the mid to long-term AI market.
Meanwhile, we have Apple, and I mentioned earlier that Apple was not seeing the worst of the drops in pre-market, and that seems to be the case. They still have their big sort of AI delivery ahead of them, don't they? And maybe are we just treading water until we see what so-called Apple Intelligence will deliver? Yeah,
that's right. So in June, they announced Apple Intelligence. I think the excitement from then has been around this driving a new smartphone super cycle. I'm a good example. I've got an iPhone 11. Every time that the 12, 13, 14, 15 came out, it's like there isn't anything good enough here for me to upgrade and spend another $1,000 on a phone. Maybe the first time AI features is going to be enough to make people like me upgrade their phone. And so I think the hope and expectation is, and we certainly heard this sentiment from Apple yesterday, that those AI features are going to really drive a stronger upgrade cycle among their customer base. Now, iPhone revenues improved in the quarter just reported, but they're still down about 1%. And so, given that that's around 50% of their revenues, they really need the iPhone segment to be kind of performing much better. And so the hope and expectation is that iPhone 16 will move that from a shrinking revenue base to a growing revenue revenue base and drive profitability.
And in the meantime, they try to reassure people about what they're doing on iPads and the China business. That was all part of the conversation as well. Thank you very much, Matt. Thanks for joining us. Matt Bloxham from Bloomberg Intelligence with the details on the tech sector. Joining us now, Ursula Marchioni, Head of Investment and Portfolio Solutions, EMEA at BlackRock. Very nice to speak to you, Ursula.
Good morning, Anna.
Volatility in the AI trade has been something that we've got used to. At the beginning of this year, it was a kind of all-out, everything with AI attached to it seemed to generate huge amounts of enthusiasm and therefore high valuations. Then the market lost its nerve around some of those tech names, and now we just seem to find a whole lot of volatile. What are your takeaways from what we're hearing on AI at this point?
Absolutely. So maybe taking a step back, I think this is a spectacular proof point of what we've been discussing for quite some time. The post-pandemic world require a completely different approach to portfolio construction. We will be open to faster rotations that have deeper impacts on portfolio performances. We need to live and adapt to this new world. And I think the second half of July really shows this in practice. So having said that, how are investors reacting? So July for me has been, extremely an element to watch really, really closely. At high level, it's very different from, a 2022 linear de-risking. Investors have continued to deploy money into the market. But to your point, I think the theme is broadening of the areas that are being looked at. So if I think at records, and I think this is where maybe, there's an interesting disconnect. Today we're seeing this sea of red, but if I look at the full numbers for July, we have seen record inflow into markets through exchange-traded products, 192 billion. Within that, there's a record, all-time record for fixed income purchases at global level at 58 billion and in EMEA at 10.6. So again, you can see that it is really an element around thinking about more dynamic asset allocation and more granularity in the exposures that we pivot towards.
Does that flow into fixed income products that you described, though? Does that tell us something worrying about expectations for the global economy or the US economy? Does it tell us about that macro jobs nervousness?
Yep, great question. And so I'll give you an answer. In the US, we've seen actually broad buying of both rates, but also credit. In EMEA, of that 10.6 billion that I mentioned, 3 went into investment grade. So again, you can see that this is not a full risk-off story. Now, going back to the AI theme that you touched upon, there's a lot of color coming through in terms of investor sentiment through sector flows. So again, are we seeing the double-digit billion that we saw earlier in the year, in the first quarter, going into tech sectors? No, but it's still a very solid 6.5 billion. So there isn't a rotation out of it. What we're seeing, again, is a broadening towards financials at 2.6, industrials at 1.3. So it's really, for me, that element around the dynamism, the granularity, and the broadening.
Yes, and is that something that then delivers for Europe, that broadening? Because that had been an expectation. Certainly when we started to see a bit of selling in big tech last month, there was an expectation that, yes, it goes into small caps perhaps in the United States. Maybe it benefits Europe as well because of the sector exposure that Europe has. But has that really delivered, Ursula? Or are we still waiting for that to deliver?
Well, some has come through. Like, we have seen, active European equity mutual funds turning positive for the first time in 18 months. We have seen purchases of European equities, including from US investors, throughout the first half of the year. Over the last 3 to 4 weeks, I have to say the purchases have continued, but it's been more localized for European investors versus international ones. But there is some of it that is coming through, although, again, loads ahead for us to reflect on.
Yeah, a lot to reflect on, for sure. And I wonder what to reflect on Japan as well. You mentioned in your notes ahead of this conversation the importance of portfolio diversifiers, such as Japan. And Japan has been such an exciting place for investors for quite a long time. Now we see correction, though. The topic's entering correction territory, falling 13% from its July peak. That's a big drop quite quickly. Is this all about the macro, the yen story, where that goes with the BOJ moving in the opposite direction to other global central banks? And how much does that matter to you as an investor?
Yeah, so there's quite a lot of things that are coming into this, everything that you've mentioned. And in addition to that, there's a liquidity profile that pertains to Japan. When risk-off kicks in, Japan typically in APAC is the first exposure that you sell because it's the most liquid, it's the easiest one. And then once you've done that, then you'll think about your Chinas and your Indias. So I would take that into the picture of what's happening today as well. Now, taking a step back, it's interesting that you mentioned, Japan has been a great story, particularly in Q1, into Q2 with some moderation, but persistent. Investors, though, haven't come back to it completely. So if I look at our EMEA clients, they are still underweight vis-à-vis benchmark from a strategic perspective, Japanese equities. So you can still see play now the structural under-ownership from, decades of deflation. So the structural story around coming out of deflation, obviously with the consequences of a BOJ being the odd one out in terms of central banks, corporate reform coming through, balance sheet becoming stronger, and in general earnings, although the picture is multifaceted, but broadly speaking, they are coming through. I think that still presents from a structural perspective an opportunity. Now, you're right in pointing out the yen, because while in the first quarter I would have said probably think about hedging that, going forward from a structural perspective, I think an unhedged position, as we rectify a structural under-ownership, the underlying long-term story is intact. Coming out of decades of deflation, with finally the third arrow of Abenomics coming through, is powerful. Investors haven't fully captured it, and, this can be a good entry point to do that.
OK, so it could be an entry point. Thinking about the day ahead, then, as we're going to be heading towards the non-farm payrolls later on today, another data point adding to our understanding of the jobs market in the United States. We got quite spooked by some of that data around employment in the ISM data yesterday. Did that shake your confidence in the US growth story? How do you put that jobs story into context?
Yeah, well, clearly we are heavily concentrated on data, and we need to continue to do so. And so is the Fed, given, the latest communication. So, again, today is an important day. And equally, going back to the earnings discussion, that is an equally, pivotal moment for us. We're getting through to, towards 50% of the reporting season. So far, vis-à-vis year-on-year estimates that we had entering into the reporting season, around 9% for the US market, we've seen earnings coming through. There's some idiosyncrasies. I think that's what Matt mentioned. But, we've seen about 12% of that growth coming through. So it is continuing to deliver, but we need to be very, very concentrated on what happens for the remaining part. Broadly speaking, that big mega force story behind AI tech, which is a big propeller for the US market, is still there. We shouldn't fret, we shouldn't doubt the mega force component, but it will go back to what's the investment horizon for the portfolio that we're looking at. Is it more strategic or tactical?
Ursula, thank you very much. Thanks for joining us. Ursula Marchioni, Head of Investments and Portfolio Solutions EMEA at BlackRock. Coming up on the programme, the Bank of England's first rate cut since COVID. We will dig into the prospects for the UK economy next. This is Bloomberg. Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacqua this Friday morning. Joining us now to talk about the UK, Dan Hansen from Bloomberg Economics. And Dan, we sat here yesterday listening to the Bank of England, to the Governor, talking about the UK economy and giving us his take on where it goes from here. And we saw this first cut in interest rates. Given some time to digest how the market has responded, we did see quite a big drop in the pound on the back of this and some reassessment of the number of rate cuts we're going to get. Do you think the market has taken the right message away that we'll get more rate cuts then from the Bank of England?
I think they've definitely taken the right message. I'm quite shocked, actually, that we've got now 2 more cuts priced for this year. There are only 3 meetings left, so that the implication there is they're going to go back-to-back, potentially, with rate cuts. I mean, that sort of, for me, that sort of jars slightly with the message that Bailey sent, which is, this very cautious message about this is a reduction in restrictiveness. There's not really any talk about easing. It's just about letting your foot off the brake a little bit. So for us, I think they'll probably do 1 more rather than 2 more, just when you're thinking about this year. And I think a reasonable expectation is to stick with the sort of quarterly profile. So they stick with their monetary policy reports, and that allows them to use the press conference. It allows them to produce a forecast to explain their decisions.
OK, so the market may be expecting too much in terms of rate cuts. Is that because inflation will be stickier than thought? We spent a lot of time also hearing from the BOE yesterday about this framework for thinking about what kind of economy the UK now is, whether it is like the pre-COVID one or whether post-COVID there's something structurally a bit different that makes it respond more slowly to the rate hikes that we'd seen.
Yes.
So do we think inflation is going to be stickier and that's why we won't get as many rate cuts?
I think in the near term that's the right domestic motivation for thinking about it. I mean, I think one reason why investors have boosted their bets on Bank of England moves is what's going on in the US. You know, there are concerns about the growth picture there. And that obviously, as you said yesterday, rightly, it all spills back into the UK. But I think the UK story and what the Bank of England will be looking at is, as we know, the sort of services inflation picture, the domestically generated inflation picture. And I think that's the thing that will make them a little bit cautious about going too quickly. And again, that seems completely consistent with what Bailey's been saying. You're right that we've got these two thought processes, haven't we, about how quickly inflation will fade. One is sort of this, I guess, relatively benign scenario where we get back to target, or we rise in the near term, but then things fall back fairly quickly. The other one is it takes a lot longer and rates are going to have to be higher for longer in order to deal with that. And obviously, 4 on the committee appear to be placing quite a bit of weight on that, which is why they didn't go for the cut. 5 are sort of more on the sort of more benign scenario. But I think, you know, that vote split tells you how finely balanced it is and how difficult these decisions are going to be going forward. Yeah,
5-4 then. Dan, thank you very much. Thanks for joining us. Dan Hansen from Bloomberg Economics. We'll bring you some of our interview with the Bank of England Governor Andrew Bailey a little later on. Coming up on the programme, AXA shares are in the green as the French insurer enters talks to sell its asset management unit to BNP. Scale, it seems, is important in this market. Details ahead. This is Bloomberg. Welcome back. BNP Paribas is in exclusive talks with AXA to buy the insurer's asset management unit for €5.1 billion, a move that will create one of Europe's largest money managers. Let's get more from Bloomberg's Alexandra Rajbandari. Alex, nice to speak to you. How did this deal come about? What's the rationale for AXA?
Well, good morning, Anna. Well, there were a lot of speculations around the fate of AXA investment managers in the past years. The main reason for that is scale, because the asset, though sizable, is kind of subscale compared to other players in the sector. And, you know, executives at AXA have said this morning and yesterday that they realized that the unit was not big enough to compete against others in order to request lower fees from asset owners and attract more of them. But also would not be big enough to support the growth ambitions of AXA in the life insurance and savings space, for instance.
OK, so there's a scale story there. And what are the benefits for BNP Paribas?
Well, for BNP, one of the benefits is also scale, because now it's becoming one of the biggest asset managers in Europe, behind only Amundi and UBS. But also, what was interesting for BNP into AXA investment managers is some franchise in the alternatives assets and private markets in particular. It's quite a known franchise on the market. And, you know, it's a hot topic in asset management. All players are trying to get their hands on it. And, you know, the likes of BlackRock are applying a lot of money in it. So this is definitely a game changer for BNP in that sense.
Alex, thank you for your time. Bloomberg's Alexandra Rajbandari with the latest on that M&A story. Coming up, we'll talk geopolitics. We'll speak to the former British ambassador to Russia, Laurie Bristow, after the biggest prisoner swap between Moscow and the West in decades. This is Bloomberg. Good morning. Welcome to the Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning. Here are your top stories. European stocks slide as soft US data sparks a global sell-off, with Japan's Topix suffering its worst drop since 2016. Treasuries gain for a 7th straight day ahead of today's jobs report. Tech troubles. Intel plummets as sales slump while Amazon tumbles on its plan to increase AI spending. But Apple says it expects a boom from its AI features. Plus, President Biden welcomes home Americans freed by Russia in the largest prisoner exchange with the West in decades. Let's go to the tech trouble headline and show you how we are trading in pre-market, US equity pre-market then. This is how some of those big tech names are trading. Your eye is drawn instantly to Intel, down by 22% pre-market, and this on the back of a cancellation of a dividend and it seems a business that's on the wrong side of the AI trade right now. So we'll see how that one trades through the morning, and whether there is legitimate read across from Intel into other stories is an interesting one to think about. Amazon also weak on the extent of its capital expenditure in AI as we got numbers through from that business. Apple a little more resilient. In terms of where we are on Europe, where does that leave Europe? Well, Europe is seeing some weakness in some tech names. So ASML was actually suspended at the start of trade, but now trading, but weaker. And we do see tech as one of those weak performers in Europe today. So the stock 600 is down by 1.4%. We also see some weakness coming through in other risk assets and some appetite for treasuries, for bond markets, essentially. We have the yield on the US 10-year down below 4% at 3.95%. So that's where we are on the treasury market story. And US futures also trading weaker, as you see, down by 1%. So further to go on the selling, driven by tech, driven by nervousness around the US economy. Let's pivot to global geopolitical concerns, though. President Joe Biden has promised Benjamin Netanyahu, quote, new defensive US military deployments in a call between the two leaders as Israel faces fresh threats to avenge assassinations of Hamas and Hezbollah leaders. Let's get more. Bring in Bloomberg's Horizons Middle East and Africa anchor, Jemana Besetcha, who is with us this morning. Jemana, good morning. What do we know then about Biden's call with Netanyahu and what the US is promising to Israel?
Yeah. That's right. So President Biden did have a call with the Israeli Prime Minister Netanyahu on Thursday evening. A White House readout of the call said that the president had discussed Israel's efforts to support its defense system and that there had been further discussions about the possibility of U.S. supplying Israel with further military equipment. This, of course, as Israel is now on a high state of alert, the Prime Minister Netanyahu saying yesterday that the country is in a very high level of preparedness in anticipation of a retaliation out of Iran or its proxies in the region after the taking out of two key figures, both from Hamas and Hezbollah this week. Now, separately, in comments overnight, President Biden was speaking to reporters in Maryland after the exchange of the political prisoners, and he was asked about how the Middle East and the ceasefire discussions are going. This is new. He was saying we have the basis for a ceasefire. Netanyahu should move on it, and they should move on it now. So again, the U.S. pushing very hard to get this ceasefire agreement across the line. One of the key stumbling blocks, of course, is that Israel has been hesitant to sign on to a truce that would lead to a permanent ceasefire. And at the same time, a lot of questions are being raised about who actually is going to be representing Hamas on the other side, given two of their senior commanders' figures have been taken out in the course of the last few weeks.
Yeah, absolutely. And quite incredible to think about progress being made in the context of those assassinations. Talk to us about the role of Hezbollah here then. Hezbollah's leader has threatened Israel, saying the conflict has entered a new phase. But some people drawing attention to the fact that he's not calling for all-out war at this point. Is that something getting attention in the region, Jemana?
It is, absolutely. And I think many people were on alert for what Hassan Nasrallah, the leader of Hezbollah, had to say yesterday. He spoke via video at the funeral procession of Fuad Shukr, who was, of course, his right-hand man and the commander that the Israeli airstrike took out on Tuesday evening. And the language was a lot of fighting talk. He warned of a potential retaliation. But again, as ever, with these types of speeches that Nasrallah tends to deliver, he kept it vague. He said that the retaliation will be very well studied and not superficial, but he did say that the war has entered into a new phase that is different from the previous period. And again, here the diplomatic channels are working very hard to stop Lebanon from being dragged into a war, a bigger war in the region, similar to what happened in 2006, which brought on a lot of destruction on the country. At the same time, another funeral procession was being held in Iran yesterday for the death of Ismail Haniyeh. The Ayatollah, the supreme leader, led prayers there, and he himself, the Ayatollah, has vowed retaliation on the attacks earlier this week. So still, the region is on alert for these anticipated retaliation, but we don't have any idea yet what form they're going to take.
Jemana, thank you very much. Bloomberg Horizon's Middle East and Africa anchor, Jemana Besetcha, with that update on the Middle East. In other geopolitical developments, of course, the Wall Street Journal reporter Evan Gershkovich is back in the United States after being freed in the biggest prisoner exchange between Russia and the West in decades. Gershkovich was released along with former Marine Paul Whelan and another journalist with dual Russian and U.S. citizenship. The president and vice president greeted them as they arrived at Joint Base Andrews.
Toughest call on this one for other countries is I asked them to do some things that were against their immediate self-interest, and really very difficult for them to do, particularly Germany and Slovenia. Slovenia came in at the last minute, and I tell you what, the chancellor was incredible. I don't buy this idea that you're not going to let these people rot in jail because other people may be captured.
This is just an extraordinary testament to the importance of having a president who understands the power of diplomacy.
Let's bring another voice into this conversation. Laurie Bristow served as the UK's ambassador to Russia from 2016 to 2020, and I'm pleased to say he joins us now. Former ambassador, very good to speak to you. Thank you for joining us. I wonder if you can tell us something about the extent of work that would have gone into putting something like this together. Involved so many countries and at such difficult time in broader US-Russia relations. This must have been a sort of epic piece of diplomacy.
Yeah, well, I think the first thing to say is just how delighted everybody will be to see Evan Gershkovich and Vladimir Kara-Murza and the other people released by Russia yesterday back home. I mean, they should never have been taken in the first place. And I think that's a really big achievement for the Biden administration. I mean, clearly, the negotiating this kind of deal, it takes a very, very long time. I think it was in the works for several years in different forms. And of course, these things are very, very sensitive, very high risk. And something can go wrong right up until the very last minute. And of course, when you're dealing with the Kremlin, you never take anything at all on trust. The other point that we just heard President Biden make was the extreme complexity of the diplomacy around this. I mean, asking the Germans to give up a murderer, an assassin who was sent to Berlin by the Kremlin to kill somebody. That's a really big ask. And I think that's, again, a great credit to all concerned to manage to put that deal together.
Yes, I mean, where does particularly what you said there at the end then about who was released by Germany, where does that leave Putin? Does this leave him claiming that this is a big victory for him? Yeah.
Well, first of all, I mean, clearly this wasn't an exchange of like for like. It wasn't an exchange of political prisoners on both sides. It wasn't an exchange of spies on both sides. Mr. Putin got back an assassin, some spies and some criminals. The rest of us, the free world, got back some journalists, some human rights activists, some political leaders, as I said, none of whom should have been detained in the first place. I think Mr. Putin will be feeling pretty happy with the outcome this morning. You'll have seen him on the tarmac in Moscow last night greeting his people coming home. Stark contrast with the greetings on the tarmac in Andrews Air Force Base. I think that tells us all that we need to know about the nature of the regime in Russia, that the president of Russia would go out to meet these people and see this as a triumph.
What about the wider story here about US-Russia relations, Laurie? Does this tell us anything about the wider story? Because relations are extremely strained. The US is supplying a country that Russia is currently fighting in Ukraine. What does this tell us then about those relations?
I don't think, as far as the war in Ukraine or Russia's war against Ukraine is concerned, I don't think it tells us anything at all. This is, I think, a freestanding deal, to get out people that both sides needed to get out and bring back home. As far as the war against Ukraine is concerned, nearly 900 days in, I don't see any sign that Mr. Putin is changing his fundamental objectives here. Russia isn't making serious breakthroughs on the battlefield. It's struggling to replace huge losses. Its economy is looking increasingly bad. But there is no sign of a rethink in the Kremlin. Russia is still attacking Ukraine every day. So I think for the rest of this year, what we'll continue to see is very, very high-intensity warfare taking place in Ukraine, killing lots of Ukrainians, causing enormous amounts of damage. The question is, of course, out there in due course as to whether there's a negotiation to be had to bring this war to a close. But I don't see this particular exchange having any bearing on that.
For those outside diplomatic circles, former ambassador, it always seems quite strange that prisoner swaps can happen almost devoid from the broader context of a relationship. And maybe we see this in many spheres, not just between Russia and the United States. I suppose it doesn't surprise you that this kind of diplomacy is possible, even when relations are so strained.
It is possible as long as both sides are looking for a deal and both sides have something to trade. Now, there, I think, lies the dilemma, really, for the United States, the UK and others. There's something that sticks in the throat about giving back to a regime like Mr. Putin's. People like Krasikov, the killer who was caught in Berlin and sent to prison for murdering somebody in Berlin, in exchange for journalists and human rights activists. We have some experience of this in the UK, when the Russian state sent somebody to kill Alexander Litvinenko in London in 2006, and they tried the same thing again with a former GRU agent, Sergei Skripal, when I was ambassador in Moscow in 2018. So there is that dilemma in there about whether you trade people in these kinds of circumstances. But I think for today, I think everybody will just be very, very happy that those people are back home and safe.
Away from the prisoner swap and back to the broader context between the US and Russia, we are going to be fast getting into it. Well, we are in an election campaign in the United States, and soon we'll know exactly who are the candidates. But we think we have a good understanding. Certainly Trump is, and probably Harris. How do you think Russia will be viewing the possible arrival of a Trump 2.0, Trump second presidency?
Well, I think probably until a couple of weeks ago, Putin was probably counting on there being a second Trump presidency. I mean, the poll figures were saying what they were saying. Of course, Mr. Biden's decision not to seek a second term, will have thrown that calculation, if that's what it was, into some disarray in Russia. But I don't think that there's been a sense in Russia for some time that a Trump presidency would give Mr. Putin everything that he wants, particularly in regard to the war in Ukraine. I think we're in a rather different position from what we were in at the time of the 2020 election.
You do. So, I mean, there's been a broad assumption that President Trump would try to bring this to an end and that might mean Ukraine giving up some territory. Would you expect it to develop in that fashion? Of course, we might end up with a Harris presidency, but if we did see Trump in power?
I think regardless of who's in the White House, and the focus, through the rest of this year for Ukraine and its backers, as well as for Russia, will be turning to the question, how do we want this to end? How do we think this ends? I personally don't see that there is a clear-cut path to military victory for either Russia or Ukraine from here. Of course, it depends how you define victory. At the moment, I don't actually even see that there's a negotiation to be had with Mr. Putin's Russia, because, as we all know from bitter experience, negotiating with the Kremlin, for example, a ceasefire, it doesn't mean the actual ceasing of fire. This is what happened in 2014 and again in 2008 in Georgia. What the Kremlin will be looking to do there is to reset to its advantage, to hope that the Ukraine's Western backers will lose interest and withdraw support from Ukraine, and then Russia gets another go at imposing its will on Ukraine. That, for us, I think, is the heart of any negotiation, to make sure that Russia never again does what it did in 2022 to Ukraine.
Thank you very much. Former UK Ambassador to Russia, Laurie Bristow, thank you very much for your time this morning. Coming up, the Bank of England governor tells us what he's looking for before making another interest rate cut. We'll bring you our interview with Andrew Bailey next. This is Bloomberg. Welcome back. This is the Pulse. I'm Anna Edwards in for Francine Lacqua. Now, the Bank of England governor says the UK's key policy rate won't go back to near zero after the BOE cut it yesterday for the first time since the pandemic. Speaking to Bloomberg's Francine Lacqua, Andrew Bailey explains what policymakers are looking for before making more cuts.
Well, we were looking for, in a sense, for sort of confirmatory evidence. We weren't looking for something to change necessarily. It was confirmatory evidence. And we had that. I think we had, certainly in my own view, is we had that. But we will be looking at this framework and saying, are we seeing this sort of rather more benign comp process which we can sort of further confirm? Or does this sort of structural issue, which is why we've put this sort of risk in, that maybe COVID, for instance, has changed some elements of the structure of the economy, which is going to make the thing more sort of resistant, if you like, to measures to get inflation down. And that's the judgment we will have to keep coming back to.
Where do you think rates settle? Is 4% restrictive?
We don't have a number on it. What I would say is this. I think it's reasonable. Don't expect we're going back to zero, because zero was the product of huge global shocks, starting with the financial crisis, then obviously COVID as well. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Governor, the government has said it will borrow an extra £16 billion this year. Does that change the calculus around rates?
Well, I'm going to wait for the budgets on the 30th of October to see the full picture, because we always condition on an announced fiscal policy. That's what we will see at the end of October, and we'll sort of put it through the machinery at that point. So
the Fed, the ECB, the BOJ are all adjusting policy, and that's very clear, and that's trying some big change in foreign exchange markets. What are those, what of those elements are actually important to you and BOE policy?
Well, we obviously don't have any target for the exchange rate. That's all a long way in the past in terms of that sort of thinking. But obviously the exchange rate feeds through in terms of financial conditions. We've seen some appreciation of sterling since we did the last report and forecast in May. Sterling has appreciated. We fed that through, as it were, so it changes import prices and so on. And that's how we tend to look at it, actually. I would say recently, over the last four or 5 years, actually, in the sort of transmission of mechanism of monetary policy, exchange rates have not played a very large role. And I think the reason for that is because we've all been facing essentially global shocks. So these are not sort of specific shocks that affect one central bank but not another. We're all in the same place, really.
The Bank of England Governor Andrew Bailey there, speaking to Bloomberg's Francine Lacqua. Coming up, we'll dive into some corporate news flow. IAG pulls back on a takeover that would have expanded its reach further into Spain. We will have the details next. This is Bloomberg. Welcome back. IAG shares are up about 5% this morning after British Airways parent company abandoned plans to buy Air Europa for a second time. The group reported revenues of €8.3 billion in the second quarter, meeting analysts' expectations. Let's bring in Bloomberg's global aviation editorial leader, Benedict Camel, who can give us more details. Not a bad achievement to just have your share price going higher on a day like today, Benny. But what sort of concessions then, back to this particular story, what sort of concessions were offered on Air Europa? And what does this say about consolidation in Europe, the fact that this is not going to happen?
Yeah, so quite a lot to get through on IAG last night. They came out with 3 separate releases. The first one was that they would reinstate a dividend. Then they said they would drop the Air Europa deal. And then they came out with the earnings, which you've just highlighted. And it was, some good news, some bad news. The bad news for IAG, at least, was that they, for a second time, failed with the Air Europa deal. They said, we came to a point where we just felt it wasn't commercially viable anymore. The concessions that we made were as far as we could push it. The EU regulators wanted more, and we sort of came to a point where we felt it wouldn't make any sense to throw even more into the ring and see if we could get it over the line. So we ended up pulling the plug on this one. Sort of cold comfort for investors is the fact that they are reinstating the dividend and that the numbers were actually fairly good in terms of earnings. The deal was never that popular among analysts and investors, given that IAG has fairly high debt, and there was a concern that, is this really necessary to pile on even more? So there might be a little bit of relief on that side as well that has now fallen through again.
And what were some of the results that IAG announced last night then, Benny? How's that been digested?
Actually, fairly well. I mean, they're sort of the last company to report among the big European airlines. We had Lufthansa, we had Air France, and Lufthansa in particular had a very sort of poor set of numbers. They had downgraded their outlook a couple of weeks ago, and the numbers that came through a couple of days as the final set weren't that great either, sort of a muted outlook. We've talked a fair bit about sort of the sense of revenge travel, if you can call it that, has sort of come to an end. IAG, and in particular British Airways, which is part of the IAG group, they have the transatlantic business, which is very strong. They also own Iberia, which is obviously big into the Latin American market. So they always have these routes across the Atlantic that are helping them, and you could see that feed through the numbers yesterday.
Benny, thanks very much. Bloomberg's global aviation editorial lead, Benedict Camel, with the latest on that story, that M&A that is perhaps not going to come to pass after all. Let's talk about where we are on the pre-market in the United States. I can tell you that broadly, E-minis are down by 0.9%. NASDAQ futures down by 1.6%. So there's a great deal of weakness, and some of that is focused on the technology sector. You can see the Intel pre-market share price telling you what you need to know about how the market feels about the numbers we got from Intel yesterday, the dividend cut and the numbers they reported. Amazon faring a little better, but not by much. That stock down by 8.4%. The broader story here in Europe is worry about tech, worry about the US, though. Stock 600 down by 1.3%. This is Bloomberg.